Good morning. Welcome to Forex In Four. Today is Thursday, August 18th, 2011. This morning, if you just looked at the currency markets, you really wouldn't know that much is going on, but yet we're in some pretty heavy risk aversion mode here and some selling, seeing in stock market indices around the globe, as well as a flight to quality with gold being bought up. Now, we talk about flight to safety as a safe haven gold and some of the safe haven currencies, but I got to tell you, with the volatility we've had lately on all of these things, I don't necessarily know that anything is a safe haven at this point. A lot of trading ranges happening, but you get the general idea. When there's risk taking place, people run to these assets. So we're looking at the euro right here, and you see euro pulled back. Right, it tried to breach the daily pivot here up at about 145.20. All right, you can see it kind of held within that area. All right, 145 has been the range. All right, we're moving back down towards the lower end of the range. We just broke through the daily pivot right there. We're beneath 144. Now, part of what's going on in the markets is, we know about the fallout, or the backlash, if you will, from the meeting of Sarkozy and Merkel, which didn't really produce anything. All right, some of the things that they talked about were, one of the things I failed to mention yesterday actually was the idea of proposing a financial transaction tax, which I guess that sort of got the markets all in a little bit of an uproar, and the kind of thing where, right now money's just going to move to where it needs to go to avoid taxation and regulation, and that's just how it is. And the sooner these politicians start to realize that, the easier it's going to be for capital formation to continue. And it's the kind of thing where we're all going to be trading out of China one of these days, because or some other third world type of operation where there's no regulation, there's no tax, there's no nothing. So we're going to have to see what happens there with the euro. So you can see euros moving lower. Not a ton of news this morning already happening. Just want to take a quick peek here at the pound. Okay, you can see that the pound actually moved up rather nicely yesterday and got just shy of 166. Okay, and this is on the 30-minute chart. But you can see here we're pulling back a little bit, and we're sitting just on that daily pivot right at 165, which had been acting, if we go back a little bit further, had been acting as a little bit of psychological resistance there in the market. You can sort of see how 165 right in this level was just sort of holding that area. But they had their retail sales figures that came in last night. They came in a little bit worse than expected. They were expecting, I think it was no change, or they were expecting a gain of 0.1%, and then with auto fuel 0.3%, and retail sales actually declined 0.2%. Okay, and then the with auto fuel was flat. So retail sales came in lower than expected in the UK. Now we're all sort of waiting on the US CPI data that's expected to come out a little bit later this morning. All right, and the headline figure is expected to show that inflation has actually decreased from 3.6% to 3.3%. But the CPI at 3.3% gains, that's still a little bit high, considering the lack of growth we're having, and people are talking about stagflation. Now, I guess it's a good thing that we're not up at 3.6%, although any miss by this, and if any of these numbers come in higher, that's going to be seen as negative by the market. But the problem is that when you look at CPI data, the logical thing to look at is, okay, what's going to be the monetary response? And the problem we have in the U.S. is that the monetary response and what the Fed's been doing doesn't seem to match up with any of the metrics that are out there. All right, basically they are attempting to put band-aids on the problems we have here in the U.S. due to fiscal policy. All right, because we don't have fiscal policy. We have this obtuse spending plan, which nobody knows about. Okay, we spend money that we don't have. We attempt to borrow it. People still flock to U.S. Treasuries because it is a safe haven asset, regardless of what S&P says. Okay, but interest rates are so ridiculously low that it's gotten to a point now where something's got to give here. So I'm not even certain what lower CPI data is going to do today. Okay, I don't know that it's going to weaken the dollar, because it's going to say, all right, the Fed can stay at bay for a while. They've already told us they're going to keep rates low till 2013. All right, if CPI data actually goes higher, maybe that's going to be seen as better for the markets, because maybe the Fed has to do something with rates. They can't keep it this low. But who knows? I mean, it's just one of these things where we've got this strange policy going on. We're in sort of these uncharted territory right now, and the Fed playbook is based on things that happened in the 70s and the 80s and back in the Depression era. And you know what? We're a different world today than we were back then. You could talk about there were basically two economies back then. There was Europe, which included the UK, and there was the US, and that was it. Well, now we've got all these other global economies, man, and everything's interwoven. So the responses that happened in the past may not necessarily be working in the future, and I think that's something Bernanke should really take a look at. So that's what we've seen here with the pound. I just want to show you, let's look at Euro Swissy here real quick. Okay, you can see that. Sorry, I've got all these spaghetti lines on the charts here. We're drawing trend lines yesterday. But you can see here that Swiss franc, we're on the 2-hour chart. I'm just going to get a little bit more granular here on the 15-minute. Okay, and you can see that yesterday there was the disappointment with the SNB that they didn't actually follow through on any of their threats to potentially intervene in the currency. All right, so the Swiss franc started to strengthen, but then they got bailed out by a little bit of risk-taking yesterday, which, to be honest with you, I wasn't certain why yesterday was a risk-taking day to begin with anyway. And sure enough, I don't want to say vindicated, but it, today looks to be like we're giving back all of yesterday's gains and then some. So you can see that, the franc's sort of been strengthening. We're sitting right around 114 area, but to be honest with you, with the way the equity markets are looking right now, I'm a little bit surprised that we don't see a bigger flight to safe havens, and perhaps that's because the market's fearful that the SNB is going to intervene in the franc, or also that the Bank of Japan is going to intervene in the yen. All right, because you have both of these safe haven currencies, which are very strong right now, and they're getting a little bit worried about it. So if we look even at a dollar yen, okay, you can see that we're just sort of sitting right in there, and we're still above that 76.25 range. So that's what we're looking at here with dollar yen. So take a quick peek at the other stuff here real quick. You can see Aussie selling off 15-minute chart. Okay, that makes sense. And we see that 106 area was pretty good resistance. I mean, sometimes these things are like shooting ducks in a barrel. And you can see that we've pulled back from there. We're at 104.5, just hitting that first S1 support on the daily pivots. All right, so flight to risk aversion means sell commodity currencies. And then lastly, I just want to show you gold. Okay, gold is up, back up over 1,800. All right, and 1,807. We're looking to make new highs here in gold, and hopefully I can show you a little bit of a longer-term chart. Let's look at the 4-hour. Okay, and you can see that we're essentially approaching that double top area and a little bit of resistance, maybe up at 1820. So we're going to see if we can get there today or what's going to happen. But it may not be long before gold goes parabolic, and by that I mean money just starts pouring in. So we're going to have to keep an eye on that. But things don't look pretty, folks. There's no way to sugarcoat around it. Fed policy is essentially for as much as you like to say Bernanke, you're doing a bad job. I think this poor guy's doing everything he can because he's got no help from politicians in Washington D.C. who they're all on vacation. Isn't that nice? President Obama came out on his nice little bus tour, which, by the way, he bought all these buses from Canada. Talk about creating American jobs, and he's got this big jobs plan he's going to come out with, and then I'll let you know about it right when I get back from my 10-day vacation. So I don't know, but you know what? Thankfully, all these guys are gone. I'm tired of hearing from them, and we're going to see what the markets are going to do. So that's what I'm looking at today, guys. Good trading to all.